Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site in Times Square, New York City, we have Danielle Shay. She's the director of options over Simpler Trading, and she thinks volatility is here for the short term, and these are the levels that she's going to be watching. Danielle, it's great to have you with me at market site as always. And we were just saying Dow just hit bear market territory.
Yes.
It's Wednesday, March 11th, and we're just around the 230 mark. And
right now, just hit bear market territory.
Yep. All right. I want to take a look at your first chart here because one thing that you are always looking at is the VIX and certain levels there to determine what your longer term, shorter term outlook is going to be. Like, what kind of strategies you are trading in this market?
So, as an options trader, the great thing about it is we have a variety of different strategies that we can pull out of our tool belt at different times, right? And so right now we're in an extremely high vol environment. As you can see, we have the VIX up above 50. The last time that it was at this levels, you had a flash crash in 2016 where it hit it briefly. Back in 2012, not quite, but obviously right here you have 2008, 2009 where you were up above that 50 level. So right now, currently buying long calls and puts is a little bit more tricky, as well as butterflies. So I'm sticking with a lot of spreads as well as intraday trading, specifically on indexes.
Yeah, and you know what? Even though this might seem a little bit scary for the longer term investor, and we will get through this as we did the financial crisis,
Yes.
Think about over the past year to 18 months to 2 years, traders out there, I can't trade a market that only goes like this. There's no vol in the market. Well, here it is. Here's your intraday opportunity. So you kind of have to switch gears like that and get back on board.
Yes, exactly. And I mean, I've been finding a lot of great intraday opportunity, specifically when you're trading the index products. I mean, you can trade NDX cash, you can trade Nasdaq futures, and especially fading the opening gap. That's a great trade right now, looking for intraday short covering rallies. These are all opportunities that we have as active traders in the market right now.
All right, let's talk about the NDX, the Nasdaq 100, and this particular index was leading for 2018 and 2019 because the exposure to technology not as down as much as the other averages, but still I think it might even still be up a tiny bit on the year. But what levels are you looking at? Because you think there's a little bit more to go here.
Yes, I do think that we're probably going to see lower prices, especially based on the fear-based selling that we're seeing right now. And I mean, the Nasdaq is always my favorite index because of, it's a modern day industrial index right here. Currently, we were sitting just right around the 8,000 price point. On a break of that level, I'm looking for 7,500. And the way that this works is if 7,500 breaks, then I'm looking for the next level, which would be 7,000. And so these are currently pretty key levels that I'm looking at for this potential correction.
How are you picking, what are those percentages? How are you picking those levels?
So this is based on Fibonacci analysis. I love Fibonacci analysis. I also like to overlay it with key moving averages. So currently the 8,000 price point was a Fibonacci cluster with a confluence of a 618 and 786 retracement level, as well as a pullback symmetry level. And at 7,000, we do have a 1272 extension from the high at 97.36, as well as a 786 retracement level and a key psychological value of 7,000.
All right, let's take a look at Adidas. This is really interesting, and I like your thesis behind it. Why are you taking a look at Adidas out of all the global stocks that are out there?
I'm taking a look at Adidas because this is just a terrible omen for what is to come this quarter in earnings. Adidas, Nike as well, I mean, these were very strong companies, but the problem with Adidas and Nike and a lot of other companies is that they have a lot of China exposure. They have a supply chain that is based largely off of China, and they also rely on the Chinese population to be buying their product. And with the coronavirus and the shutdown that we're seeing in China, we're seeing those sales numbers drop, and we're having issues with the supply chain. And look at Adidas. Today, it was down over 14% on earnings because of this coronavirus impact. And so for me, the earnings impact that's going to come in the coming weeks is absolutely critical to the health of the overall stock market, and I think it's going to be negative.
Right, and let's spin this positive for a minute. And Goldman Sachs came out this morning, Dave Costin came out and he wrote that second quarter and third quarter there's going to be some pain, but fourth quarter and going into 2021, that's when it starts to get interesting, when the growth comes back into the picture. Now, from a technical perspective, what do you need to see happen in the market, taking fundamentals away, for you to get more constructive longer term?
So what I would need to see in the market on a technical perspective is, I mean, the indexes have to bottom out. I mean, they have to bottom out, they have to reach a critical area of support, and we have to see buyers coming back into the market with some confidence. At this time, I mean, we just have no idea when that's going to happen because of the sheer panic. On a fundamental level, we need that panic to die down so people can feel comfortable booking flights again, going back to work. And at this time, we just don't know when that's going to happen.
All right, Danielle, great to see you as always. Thanks for joining us at MarketSite. And thank you for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.